Hello and welcome to this week's market update for February 23, 2025. Today we'll review key economic developments, preview upcoming reports and Federal Reserve updates, highlight notable earnings, analyze the fundamental economic landscape, and provide a detailed technical market review. Stick around to the end and I'll tell you how to get our free list of our top 10 dividend ETFs. In case you missed it, U.S. business activity showed some signs of stagnation this week as the effects of trade policies and shifting governmental expenditures remain uncertain. Additionally, consumer sentiment has experienced a decline as existing home sales fell below expectations, as well as an unexpected contraction in the services sector. While one report doesn't make a trend, this is something to watch. Officials from the Federal Reserve spoke this week, basically echoing the likelihood that rates will remain the same in the near term. Coming up this week, there will be quite a few reports released. Tuesday is a busy day with the Case-Shiller Home Report released at 9 a.m. Eastern, and the U.S. Consumer Confidence released at 10 a.m. Wednesday is the U.S. New Home Sales Report due out at 10 a.m. Thursday has the initial jobless claims and U.S. GDP preliminary report both at 8:30 a.m. Friday also has a few including personal income and spending reports as well as the U.S. PCE price index all released at 8:30. So, a big reporting week that could move markets. On the earnings front, the big one is Nvidia, set to release Wednesday after the market closes. As one of the leaders in the AI revolution, it will be interesting to see its financial results, but also to hear what they say on their conference call. One of the other big earnings reports due out is Home Depot, due on Monday before the market opens. If the housing starts and falling home sales are an indication, Home Depot could be under pressure, especially if they are cautious about their future earnings. Other earnings include Salesforce on Wednesday and Berkshire Hathaway on Saturday, that will include Warren Buffett's annual letter to shareholders. Piecing this together, the fundamental picture becomes less certain. Let's face it, the price to forward-looking earnings for the S&P 500 is around 22.2, above its 10-year average of 18.3. So even as the S&P hits all-time highs this week, the potential for a price reversion if economic conditions weaken are becoming stronger. In my view, the potential for retracement is likely a short-term phenomenon. As weeks pass by, the political uncertainty will become clearer. The economic conditions will be underpinned by the continued implementation of artificial intelligence. As I've said in the past, the AI revolution will be bigger than the internet, and the speed with which it will disrupt will be numbing. This gold rush will absolutely drive continued speculation, even at elevated levels. Other fundamentals remain positive. GDP will grow, albeit a little slower. The labor market remains strong even as job growth has moderated, and inflation is fairly stable, although higher than desired. On the technical side, things took a tough turn on Friday, with all the major indices dropping significantly. The S&P dropped 1.7%, the Nasdaq dropped 2.1%, and the Russell 2000 2.93%. This makes 3 of the past 4 Fridays with similar large sell-offs. Based on past experience, a sharp drop with rise in volatility means there is a high probability of a continued sell-off, at least early in the week. Taking a closer look at the S&P, we see a breach of a short-term trend line. This indicates a possible new consolidation pattern or even a short-term reversal. Also, the MACD slipped to the negative slightly with RSI at 46.51, indicating that there is the potential for continued selling pressure. Look for near-term support for SPX at 5,900. The Nasdaq also showed some weakness on Friday, but the pattern there has not been convincingly broken just yet. Near-term support could be at 21,400. The RSI is still above oversold territory at 48.82, and the MACD is still slightly positive. However, several of the FANG stocks showed negative movements this past week. The most concerning of the batch was Amazon, who broke through a long-standing uptrend sharply. Like the pressure seen on Walmart this week, which dropped 10% from its highs due to cautionary guidance, Amazon is likely to see similar pressures. So, although less certain, the Nasdaq appears poised for some price consolidation also. The worst performer was the Russell 2000, dropping nearly 3% this week, nearly all on Friday. Sentiment is that these smaller companies are more likely to be affected by economic weakness or by direct tariffs. More concerning for the Russell is the sharp breach of the long-standing trend line. The index did not get close to a new high this week like the S&P and Nasdaq, and is leading the way downward. The broad nature of the Russell 2000 stocks is concerning on a longer time scale. The MACD moved sharply lower Friday and the RSI is nearing an oversold range at 35.35. The good news is that the Russell is likely closer to a bounce given the RSI metrics, but not a certainty and definitely worthy of caution. Well, there you have it. A not-so-rosy picture in the near term. Long term, however, I remain optimistic about the U.S. economy and the amazing transformations underway. As I have mentioned many times, the AI gold rush will continue. Our very economic and social cultures will be changing drastically in the next 10 years. Of that, there is no question. With the Trump administration and Elon Musk's efforts, there may be short-term pressure, but with every governmental cut, our future gets brighter and more sustainable long-term. Hey, if you want more content on trade strategies or analysis on high-yielding ETFs, check out our website at www.evervest.com. Also, if you found this material valuable, please like and subscribe to the channel. Your support is what keeps us motivated and it can really help to share our message to more people. As I mentioned in the opening, if you would like to receive our free Top 10 Dividend ETFs guide, just subscribe and put dividend in the comments. Thank you for watching. Until next time, good luck out there. As always, the information presented in this video is for educational purposes and should not be considered financial advice. Be sure to evaluate how this information and securities discussed align with your financial needs. Consult with a financial professional if needed.